So look, you go to butterfly. I just want to show you here. You go to butterfly, and let's just say on the SPY, I wanted to do 670 for this Friday. Not that I would. They don't even have a 670. Oh, where is it? I went past it. I just want to show you what I showed you before. You see? Buy to open plus one. Sell to open minus two. Buy to open plus one. See that? That's your fly. And then when you go to close it, it looks like this. See, sell. This actually would say close. Here. When you go to close it, it'll look like this. Sell to close that the strike that you were long. Buy to close. Buy back those two strikes, and then sell to close the other one that you're long. Got it? I didn't. I don't think I really said that exactly. But ride the pony, the flying five. Yeah. Um, he's asking me about a day trading rule that we use. The reason why it's most used for day trading, ride the pony, is because the 5 period moving average is most effective on a 5 minute chart or a 3 minute chart or a 2 minute chart, not on a daily. No, you wouldn't use the 5 period moving average on a daily chart. It's not significant enough. The 8 is probably the lowest you'd go. So I didn't talk about the 5 EMA on a daily chart. That just wouldn't make sense. You want a broader average since I mean, if you had the 5, it would basically just follow the price like this. It just wouldn't do anything for you. So it's best on day trading because when you look at here, I'll throw the 5 on here and you'll see what I mean. So there's the 5. I'll put it in red so you can see it, and then I'll make it thicker. I'm referring to not the MAs, but the trajectory of price action on the candles. Well, the flying 5 refers to the moving average. So maybe I don't understand what you mean. But here, if I go to a 2 minute chart, so this is called the falling 5. Flying 5, falling 5, just the opposite. See how significant this is? So if you're trading this short here, 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 and you're about to come up, you may be, you start to come up here on the 50 period moving average, right? You see the 50 right here that I have the yellow dots? And let's say this is you're shorting it. Look at the trajectory of the 5 period moving average. You see this red line right here? I'll just color it. Wow. Like you see the trajectory of it? It's almost straight up and down as it hits the 50. Whoo! It's very unlikely that price from here is just going to bounce up like this and screw up your trade. And that's because price has to flatten out first. And that the moving average will flatten out. And once, I'm sorry, the moving average flattens out, and then price has an opportunity to get above it. And you see that. But when the moving average is moving at such an incredible trajectory to the downside, if you were worried about this, or if this was your target, and this is the candle, and it's screaming through your level, and the 5 period moving average is just shooting straight down along with it, that's called the falling 5. So you stay in the trade to the next level. Same thing on the way up. If you were to hit a level on the way up where if you said, well, you know what, I'm going to take this trade here, reversal candle, whatever, and there's the 20 period moving average. I'm like, well, the 20 is very formidable, right? But look at the 5. See the 5 here? Look at this thing. It's almost straight up and down as it hits that level. So the point of using it is when you're approaching a level or a target, which can be one and the same, if you check the 5 EMA on a short-term time frame, like 2, 3, or 5 minute, if the trajectory is such that it is flying, like almost straight up and down, and price is hanging with it, it most likely will bust through that level, and you can then trade the next level of resistance. If it's falling like crazy, that's called the fallen 5, and it's coming up on a level, there's a good chance it'll break through that level and you can go to the next level below that as your target. It does not have any correlation really with day trade with the daily chart, because price doesn't move like that unless what you're referring to is maybe a 20 period moving average or something. So but it does not apply to a daily chart or swing trades. No, that's a short term moving average that's coming up on a level. Are you referring to like maybe the 20 when coming to the 20 period, when price is moving? These moving averages are too slow. These are slow moving averages. So to try to use this in the same manner, it doesn't make sense. They're just not, I don't know, I think you're just over analyzing and looking for something that's not there. Or maybe you heard something I said and wasn't clear about it, but it does not apply for daily chart, for daily swing trading. Moving averages do, but not the falling 5 or the 5. Go back to Google again. Yeah, so Google, we have a short. It was looking really good on Friday, and then you just got this Monday, Tuesday, Wednesday. So depending on what Google does, if Google takes out this level to the upside, then whatever's left of the trade, just close it. Or you could just let it sit. I wouldn't roll it because the setup is broken, right? The setup is no longer, once you take out the swing high, there's a lot of people said, well, here's Google. Can we just roll it to next week? You could if it was still a short, but look at these levels. See, boom, boom. So now if you close above this level, that confirms that the short is no longer valid. You're going to retest this level, and if you break above it, then you no longer have a short. So you might as well close it, or just, it goes to the dumpster. It's a setup that didn't work. KRE is trading below a level and still shows a setup to the downside. So we are in the money because we have the 63s and we're here. So if we take out this level, you double down. If you take out the top of the candle here, you get out. So we'll see what we're going to do with that trade. Up here, bye-bye. Down here, double down. Or just take profits. Yeah, ride the pony. I get what you're saying now, but I don't think that that's a way to measure price action for a swing trade. I think you're better off looking at previous swing levels and moving averages that have been breached, tested, or retested, but I wouldn't be all that concerned. I mean, obviously, if you're going to look at taking a trade to the upside, you do want the moving averages stacked positively. So there's that aspect of it, and then if you pull back a little bit, that's a good trade. So there is something to be said about having them stacked and somewhat of a trajectory, but I'd rather you look at previous swing levels and major moving averages that have to be either breached, tested, retested. I'd rather you look at the RSI, relative strength indicator, to see oversold, overbought conditions, momentum, and then what is the triggering chart for this? It's yields. What market internals are going to help push your trade?
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.